What's good everyone, welcome back to another video. This video I'm going to try to break down how I took this 1927 short from gold, okay, based on FVG entries. As you guys know, I mainly time my entries via FVGs on the daily or on smaller time frames as well, or a sweep of liquidity. In this case, for this trade itself, it was a mixture of both a sweep of liquidity and also a FVG entry. So just sharing with you guys on the daily chart first, you can see price rejected at this previous daily resistance over here, this whole order block. You can see there are clearly no daily closes even in this gray order blocks. So this means that this is a bearish sign. This is a huge resistance and gold fails to hold above this area and close above. And because this area was tapped during FOMC itself, okay, this is no coincidence. After FOMC itself, okay, after Powell spoke, price tanked from there, all right? And the following days, you can see it totally crashed right after the FOMC, marking the local top over here. So these two yellow lines I added in earlier last week as well, because this was the area where price during the 4th of September and the 5th of September was hovering about before having a huge drop down to the 1900s. So I marked that as an area of interest there as well. But anyway, just zooming into the trade I took on Monday and how I figured out an entry from there, okay, I drew a trend line over here. Why did I draw this trend line randomly? Well, it is not random at all. As you can see, zooming in a little bit, you can see on the H4 time frame, price respected this trend line pretty well. Okay, it held support on this trend line for a bit, broke below, but when it came back up again, it held this trend line again as support and continued pushed up. And now, after you can see, after FOMC, price pushed down, broke H1 and H4 structure over here. This was the first change of character, break of structure over here, and therefore this leans me more bearish as well, because you can see the lower time frames is breaking structure and reversing trend. So now I'm more interested in taking shorts. Price came back up, retested over here on last Thursday. Well, this was a pretty good entry because it retested the broken structure and then pushed down. But anyway, I'm more concentrating on the trade I took on Monday, so I'll be concentrating on that. So anyway, coming back to what I'm trying to say, price broke below this trend line, retested it pretty nicely as well. You can see it respected this trend line very nicely. Even the candles, the candle body closes is right below this trend line, and so this was a pretty important trend line. Okay, so let me just get to the picture and how I got the entry on Monday using the zoom back function. This was the daily chart. Okay, this was how the market looks like before the markets open. The daily candle is kind of rejecting this trend line right now. All right, and so my thoughts were to look for daily FVGs first, but as you can see, there is no current daily FVG form. Price is moving pretty efficiently. Zooming into the H4, all right, H4 also does not really have FVG. This was already previously filled, and there wasn't much of a H4 FVG as well. Zooming into the H1 FVG, I marked out over here, this was the H1 FVG. Okay, so this was a potential entry over here. All right, and I zoom in even closer to the M15 FVG. M15 FVG is currently right over here, 1927.5 and 1927. Okay, why I zoomed in all the way to M15 is because since there was no daily FVG, no H4 FVG, might as well look for a H1 and also a smaller time frame as well, which is M15 FVG. I don't go any lower than that. Okay, now zooming back out to the H1 time frame, let's run it. Let's run the chart. Okay, as you can see, price once market open immediately filled this H1 FVG. Of course, I wouldn't look to enter over here because this was right at market open, and you know, I don't like to enter trades during market open because the spreads are crazy. So I tend to look for trades only after London opens. Okay, so let's run the charts forward again. Okay, price after taking out this H1 FVG started to push down, breaking H1 structure as well. All right, push down even further, but you can see this huge wick over here, this huge entire wick over here. Okay, also sweeping the Asia's high over here. And as you can see, zooming into the M15 chart, price retraced all the way to the M15 FVG, and that is where I was interested in taking an entry. Okay, as this was London open, price pushed up, so I had my alert set around 1927. I zoomed into the M1 chart because on Go I usually take my entries on the M1 chart. So as I mentioned, this was the H1 FVG, which was already filled earlier on the market open, but the M15 was still there. Therefore, price eventually came back up during London session. This was London open around this candle. This candle was London open. It pushed up first, all right, came back up to test this M15 FVG and started to reject from there. As you can see, price was tapping into the M15 FVG and had some reaction, and then eventually price starts to come back down. And as you can see in this M1 chart, once price broke this M1 support low over here, this was my entry. There we go. This was my entry. My stops just resting a little bit above the highs. Okay, this was just a 10 pip stop loss, but if you are worried that price will come back up again, and to factor in gold spread and the movement, I'll usually set about 15 pips stop loss. Okay, thereabout. And then I'll be targeting, remember, my daily high on the daily chart. My target on the daily right now is this sell side liquidity, which is the 1901 regions. Coming back to the H1 chart, oh sorry, the 1 minute chart. So that was my entry right there. Okay, and then once I enter a trade, I try not to manage my positions. I'll just zoom out again on the H1 chart. Okay, I'll just set alerts. Let's say once price reach an area of maybe an FVG area, okay, I will set an alert. Once price taps that area, I'll take a look, and then, but I wouldn't try to close my position or whatsoever. Usually I just, once it broke structure again, I would look to take break even trades. So my my alerts was around 1914. Okay, let it run it further. Okay, you can see here, this was New York open. Price pushed down from the entry, the M15 entry. Okay, but pushed back up again. Okay, so this was where you could actually look for a second entry if you miss this London entry. Zooming into the 1 minute chart. Okay, this was the two areas you need. As long as price does not sweep this London high over here, created over here, which is the M15 FVG as previously mentioned. Okay, your stops, just wait for price to kind of break structure again on the 1 minute chart. As you can see here, price pushed up with a huge candle, okay, but failed to sustain and hold above 1926.5, which was the H1 FVG. Okay, and eventually price came down, broke structure on the M1 again. See over here, and you could have entered over here another short entry over here with stops, because this was a lower entry. Your stop loss still had to be above the highs over here to be safe, 1927.57, and that is where the trade will be invalidated. Okay, let's run it forward. How did it go after this? Okay, you can see price started to form a lower high, and you can see over here, this was the huge M1 candle that pushed up again, right? What do you see? There is a M1 FVG which turned into an inverse FVG, and you could have taken an entry over here as well. As you can see, no M1 candle body closure above this M1 IFVG. So this was another entry. Stop loss again, same thing. Invalidation is above this London high. And then going back, zooming out from the H1, play it forward, it started to drop from that area. And that is how I took this entry. I just let the price run. After this huge drop, all right, I did not see the charts afterwards. I just had an alert set at 1914 areas, and once the price broke through this area and the H1 candle closed below, I brought my stop loss to break even. And of course, my main target was this sell side liquidity over here at 1901s. And of course, if I play it forward, eventually it came down to my TP target, my main TP. So that was how I found my entry. Okay, so pretty straightforward. As I mentioned, my main target, my main strategy is to look for a sweep of liquidity, and if there isn't, of course, I'll look for an FVG entry, and that was what I got. It was a mix of both. Okay, I found an M15 FVG. All right, that's why I was interested. Plus, price swept the Asia high as well. The Asia high liquidity swept. Okay, anywhere once price came back below 1926.5, which is the Asia's high, that could be an entry as well. If you are not so aggressive as me, taking a direct entry right at the FVG at 1927, you could have taken a safer entry when price pushed back down below the Asia's high, and then you get a safer entry, basically. Not safer, I would say an entry with more confirms. Okay, so this was how I found my entry, together with price respecting this high created on Friday. So hope this video finds you well, and if you've got any questions, do let me know. Alright, take care, and remember, the markets are always here, but your capital may not.